Let's talk about investments. And also, let's talk about retirement and bring these two together. Hey, you're tuned to Now Tell Us. I'm your host, Anthony Morore. At Now Tell Us, we have guests come and tell us stories. They come and inspire us. They come and educate us on a subject. And always, we have some great guests who come and join us here to tell us a lot of things that we may not know, some things we may know but might have forgotten. And it's always a great experience. And today we have a great guest who is known as Steve Selengut. He's going to be here to tell us about retirement money secrets. Before we go to meet Steve, I would ask you to please subscribe to our channel from wherever you are listening us on. If you are not subscribed yet, follow us if you're on Facebook. And please remember to share these episodes with your friends so that they can also get to hear what we're being told by our special guests. And now, please join me as we go to meet our special guest today, Steve. Here we go. Hello, Steve.
Hello, Anthony.
How are you doing?
I'm doing well. I'm doing well.
Wonderful. I I guess you are. You have a good smile on, so I guess everything is going on well there.
I just got back from 2 months in Europe, or 2 weeks in Europe, so that's part of it.
Oh,
So
where in Europe? Where are you? Where
I
you
have
are
had no stress. I have no stress for the last 2 weeks, so that's why I'm so smiley. I
you?
was in Portugal mostly, a little bit in Spain, Madrid, and we did a river cruise in Portugal
Mm-hmm.
on the Douro River,
Oh, okay.
and we
That's
wound
good.
up in a city called Porto, which is a really pretty place. It's right in the heart of the Portugal wine country, and
Mm-hmm.
they're famous for port wines mostly. And we did drink a few glasses of wine while we were there.
Oh, okay. And even before we came on, I got to discover that you've been on cruises, even before several of them, I guess. How
Uh, when
always
you
here and there.
well, it's part of the theme, I guess, of the book we're gonna mention. Retirement money secrets is
Yeah.
when you get to be in my age group, which is the 70 to 80 age group. Um, Hopefully you'll be in a position where you can go and see the world, you know, and get to know, the rest, everything that we really don't appreciate as much in the United States as much as we should. And
Mm.
you can learn a lot by going overseas, and you meet a lot of interesting people.
Oh,
So
that's great. I would desire that. That once I am in your age group, I can be able to go anywhere that I desire to be, and
exactly,
yeah, so that would be
if
great.
it's there and you're interested in it, you want to be able to go for it.
And I guess even our listeners would want to be at that point. Now, before we come to going into detail with what we are about to share today, maybe we can get to know you a little bit better. Where you are from? Is that where you are right now? What career
Mhm.
you in a short description?
In as little space as possible.
Yeah.
I'm I'm right now today. I'm an investment coach. I teach people how to make more money with their investment income than they think that they can safely, and I encourage them and show them how to transition from where they are today to where they could be if they had enough income to take care of all their expenses and so on.
Mm-hmm.
How I got to where I am was by doing that. I started investing when I was around 25 years old, and focused immediately on generating as much income as I could. I guess for two reasons. One, because my father was a real estate developer and manager of rental properties, and things like that. So he always focused my attention on generating enough income to take care of all your needs. You
Mm-hmm.
know, so I got right onto that bandwagon, and so I was not particularly happy with the job I had in New York City. I lived in a Northwest New Jersey, which is on the East Coast of the United States.
Mm-hmm.
And I commuted every morning to New York City, and I had a job that really wasn't too exciting. Although it was in financial services, it wasn't where I wanted to be and just didn't pay anything.
Mm-hmm.
And, so I made up my mind I was going to take this investment portfolio that I had received from my dad after I finished college and there were no more expenses and he wanted me out of his hair. He said, "Here, I didn't spend this on your education, it's yours." And I started investing it. And by the time I was, 9 years later, when I was 34, I was making about 5 times on my investments than I was in my salary.
Mm-hmm.
So I said, "See you guys. I'm not working here anymore. I'm going to start my own business," and I did. So I found a couple friends. I showed them what I had done with my portfolio and how I did it. I said, "You want me to do this for you?" They said, "Okay." And I got started with two small clients back in 1979, and
Wow.
I sold my business. I was managing my own, and theirs was less than $1 million, or maybe just over $1 million at that time.
Mm-hmm.
Um, and I sold my business last May, and I was managing about 110 million.
Wow, 110 million. And I'm just curious, what did that investment portfolio look like at that time that you're being handed over?
Oh, the one I was handed over was very interesting. It was you take the old Manila envelopes that you
Yeah.
can get. Your lawyer usually has
Uh,
things like that he hands you with full of papers.
yes.
Well, the papers that were in this Manila envelope were stock certificates,
Okay.
and it was my 25th birthday party with my parents and my wife and my children, and we were at the table and my dad handed this to me. I emptied it out and it was maybe 40 or 50 different stock certificates of um, what investors would think of as big board blue chip stocks
Okay.
like General Electrics. At that time, Sears was one of them, IBM, all the companies of that nature. I mean, perhaps the whole Dow 40 was represented. I don't know, and a couple others. There wasn't really no big tech sector back in the 70s.
Yeah. Yeah.
IBM was about as in General Electric were the electronics companies of the day.
Mm-hmm.
Computers
Hmm.
were just getting underway.
Yeah.
So it was an ideal time really to get started in the investing world. And I, like I said, my job was in the pension investment department of a big insurance company. So I was familiar with investment portfolios and how the company managed those portfolios for their corporate clients, for
Hmm.
profit sharing plans and defined contribution plans. So that's why I was mirroring my portfolio on theirs, with the exception of two things. When I
Hmm.
had a profit, I had a target profit,
Okay.
just as if I was running a department store. A
Mm-hmm.
stock to me is no different than a pair of pants on the shelf. Somebody wants to buy it, I'm going to sell it
Hmm.
as long as I get my markup, right?
Hmm. Hmm.
So that's how I ran portfolios, and so it was very easy for me to really take advantage of almost any market environment as long as I stayed within these quality securities that I knew so well. And uh, you know. You mentioned the name of some company that's just starting out. Nobody's ever heard of it. It's got great expectations, but it doesn't pay any dividends,
Hmm.
and we don't know what's going to happen to it.
Hmm.
You know, nobody could have predicted that Amazon or Microsoft, or particularly Microsoft, I think was really tougher than Amazon because Microsoft was really introducing software
Yeah.
into the marketplace when
Mm-hmm.
nobody ever had their own software, computers and stuff like
Mm-hmm.
that. So that was a high risk situation, and they did remarkably well. Um, but what I do is I invest in securities that today that contain all those companies we all know and love that I knew and loved throughout my career.
Mm-hmm.
But they're managed portfolios, not dissimilar to mutual funds, but their trusts and their trust agreement is such that they have to pay out 95% of their earnings to the shareholders.
Okay.
So their goal is to provide income. The goal of a mutual fund is to provide growth in market value.
Mm-hmm.
And then the guy, the customer, the unit holder, he decides if he wants to take profits or not.
Mm-hmm.
In my case, the manager decides when he wants to take profits. He does it. He sends me 95% of the profits, me being Mr. Shareholder.
Mm-hmm.
Okay. So it's a different type of security, different but not new. Um, these kinds of securities existed decades before mutual funds
Mm-hmm.
and maybe 125 years before the first ETF occurred.
Okay.
So that it's nothing new. It's not just not very well known, and it's just not sexy enough for Wall Street to care about.
Mm-hmm.
If you're giving away, if you're giving your shareholders 95% of your earnings, you're not going to grow in market value.
Mm-hmm.
Would Amazon be what it is today if it gave us, 95% of its earnings? Not at all. So
Mm-hmm.
that it's specifically and unrevocably dedicated to giving the shareholders income every month, every quarter, whatever. And that's
Yeah.
its goal. That's why it's there. You're not going to see one of these go up to $100 a share. I don't own any. I don't own any of them that are. I own one that's over $40 a share.
Mm-hmm.
The
Okay.
majority of the ones I own, and I work with in my own personal portfolios, I work with about 240 of them of
Wow.
different types,
Yeah.
and the vast majority of them are under $20 a share. Like 80%, I would say, are
Yeah.
under 80, and probably 60% under 15. So
Mm-hmm.
it's a price range where anybody, no matter how small an investor, can own a piece of the action, the Microsoft, the Amazon, all the big name companies you hear today. By buying one of these closed end funds, they can own all those stocks
Mm-hmm.
in their fund
Mm-hmm.
and in a position where it pays them much more income, um, predictably, than any of the companies themselves pay.
Wow.
So,
I think there is so much to
and
know
that's the short
there.
and that's the short form explanation.
Yeah. There's so much to know there for someone that maybe have no clue on this area. Maybe uh, I came across a book that you've written, and this is what you're basing our episode on, known as "Retirement Money Secrets." Could that information be inside there, so such that if
You
I go,
bet.
yeah,
It's
mm-hmm.
almost every word I just said will be in there in one form or another. Plus
uh,
a lot more, and a lot of illustrations of what these securities look like and how they compare with the popular funds of the day, like SPY, for example, and which is um, an index fund of the S&P 500,
mm-hmm.
and BND, which is like stands for bond. It's a I'm not sure who provides it, but it's a an index fund of what's going on in the bond market. You know,
Mm-hmm.
it compares that stuff and it looks at um, gives charts of how the income is produced and how it's compounded and how it grows the capital itself, and all the disciplines I use to determine what I'm going to buy. How do I determine the quality? How do I maintain the diversification? and of course, how I set my targets for profit taking.
Hmm. You talk about traditional investing, focusing on the wrong goals. What's the wrong there? I mean, which are the wrong
Well,
goals that you talk
it's the
about?
wrong goal for a person in retirement because it focuses on market value, which you can't spend.
Mm-hmm,
I don't doesn't care how high that stock goes up unless you sell it, you can't spend your profits.
mm-hmm,
You know, so it focuses just on market value, and that's the be all and end all of most investment programs is to grow that market value, and we're going to sell for you 4% of your assets every year in retirement so that you can live on it.
mm-hmm,
Well, 4% of your assets when the market goes down like it did in 22 or 87 or 2000 or 2008 or, all of the crashes and problems of the years, 4% becomes a smaller number, probably less than you need,
mm-hmm,
so you have to take more. Then on the other hand, what do I sell? What as a investment as the manager who's managing your money and wanting to give you at least 4% or some actual fixed dollar amount, what do I sell each month to give you that money? And most often they take losses rather than gains because they don't want to be in a position that they've caused you additional tax payments.
mm-hmm,
But they apply the exact same logic to an IRA account where there are no taxes currently, or a Roth IRA account where there are no taxes ever.
mm-hmm,
They'll apply that same logic as they do to a joint account, okay, where
mm-hmm,
there are taxes. So it's to me, it doesn't make a lot of sense to let the taxes wag the dog. I used to tell my clients when I was managing individual portfolios for people, if you're that concerned about the taxes, give me the profits. I'll be happy to pay the taxes.
mm.
Because no matter what the tax rate in the United States, it's still
Yeah,
less than half of what you made, no
yeah.
matter how much you make,
Mm-hmm,
And if I'm walking down the street and I see $100 bill, I'm not going to say, I'm not going to take that because I have to pay taxes on it. And maybe it'll be $200 tomorrow, then it'll be worth it, or either of those things. I'm not going to say that. I'm going to pick it up. And if I have to pay taxes on it, so be it, you know?
mm-hmm,
So, it's an oversimplification, of course, but that's the general idea. I focus on the income. I make sure that when I take that vacation to Europe, that I'm making more than enough money to pay for it.
mm.
And
That's good.
conventional investment philosophies, there is no cash available to do that without selling stuff. You can't put it aside because there's another thing in the book we talk about in that very same chapter or that very same section of the book about how the automatic in any managed program today, almost every penny of income is reinvested automatically.
Mm,
So even if it's generating 3% income, it's still reinvesting it. So every month they have to sell something
mm,
to give you your 4%.
mm-hmm,
So you're always going backwards. You're always taking losses because they'll never take profits.
mm. Yeah, you talked about taxes there, and I meet with people who are afraid to do business because they are looking at the high taxes that they have to pay. It could be anywhere in the world. Maybe they are even being charged 50% of the taxes. And I ask the people, I mean, this is what I compare it with. 100% profit to you of $0 is still zero.
That's right.
So if you're being asked of 50% of $10,000 that you make, so that you pay 5,000, it's far much better than 100% that you would have wanted, but did nothing because you,
Yeah,
yeah,
right. It's true.
yeah.
So,
Mhm. Yes, we you talk about the market crashes that have been there, and this is something that happens in the market. They go up and down, up and down. And in your book, you talk about understanding market cycles. Can you maybe give us a clue of how that goes about?
well, I think anybody over the age of 30 has probably either seen or heard about the market going up and down.
Yeah.
I mean, every news channel always spends a few minutes every day talking about what's going on in the stock market. Some of
Mm,
them even go so far as to try to predict what's going to happen in the stock market, which, of course, most professionals know is impossible. But the idea that the market is going to go up and down is perhaps the only certainty that exists in the economic environment.
mhm,
That's the way it's going to be. They're
mhm.
going to go up, they're going to go down. If it's either profit taking, it could be wars, it could be um, pandemics that caused the market to crash. It could be anything. In '87, it was probably just a computer loop
Yeah.
when they started the big heavy trading on in the New York Stock Exchange, and these people used to put in these sell signals at a particular number, and the more you sold, the more the price went down. It kicked off the next number, the next number, and next number. It just spiraled down. I mean, anyone who is just buying those blue chip type stocks we were talking about before was going in there. I mean, I was throwing orders in for Coca Cola and Pepsi and IBM and all these other great companies. I was saying, "What's it at?" They'd say $40. I said, "Put an order in and buy it at 30." And we were getting it because
Mhm.
everybody was in a state of panic because the machines were selling everything. So beware of AI.
Beware of AI.
It may not work the way you think it will. Anyway,
Yeah.
I'm a little I'm not going in. I'm not like a lot of investors say, "Hey, AI is a thing of the future. You got to get in there and buy a lot of that." I say buy a lot of put your money into a lot of what are called closed end funds with private managers who will make sure that you're going to get something from the AI explosion, but you're not going to go in 100%. You're not going to pick the wrong AI company. I mean, how many other companies came to market at the same time as the big guys today?
Mm,
IPOs
many.
happen all the time, particularly when the market is up,
Yeah.
because let's in dollars and cents, when you take a company public, you're not you're not letting go of 100% of the shares.
Mhm.
Okay, you're saying this is my company. I'm taking it public. I'm going to let the public have 50% of this.
Mm,
So the 50% of the public is going to go in and they're going to bet on whether or not your company is successful.
mhm.
Well, if it's got a good idea, a good concept, an Amazon type concept or something in AI, that's going to get an initial explosion of interest that's going to just take that price up and up and up. But look historically at how many companies that's happened to and look where they are 10 years from then, 10 years from then. They may not even be there anymore. But
Mm,
I can tell you where their owners were, the ones who sold those 50% of the shares. You know, they're out there in that yacht that's parked in Monaco in the shipyard there. That's where those guys are because they took the money and ran. You know, and then if the company's successful, we'll be even richer. But we're
mhm.
going to get it now. I mean, I I just sold my company in May. I didn't get anywhere enough money to buy one of those spectacular yachts.
Okay.
Not at all. But the company that bought us out, bought my firm out, they didn't do it because they loved us or anything like that. They did
Mm,
it because they're building a book of business that they're eventually going to sell to some big operator.
mm,
And they're hoping that they pick the right businesses and they're going to get their money out. They're a private company. They're In fact, one of my partners took some of his payment in their shares. I didn't want their shares because
mhm,
I know that I can make enough money just off the money. I don't need to speculate on
mm,
this company.
mhm.
But that's the way it is. But
Yeah. So when you talk about picking right, getting the right manager
uh,
who maybe because maybe I'm not gonna be there doing it myself. So then I pick a manager. How do I know the right manager that is going
Okay. If you're hiring, if you're looking at a security and you want to get a manager that's managing your money, or if you want to hire a professional to actually manage your portfolio.
to? Mm,
I was a professional manager for people. I had about 150 clients,
wow.
about 135 families um, that I worked with, and they hired me to actually make all the transactions. I mean, I would take their portfolios. I'd tell them, look, I'm going to get rid of this, this, and this. I'm going to add this, this, and this. But this is the type of thing I'm going to be doing. I'm going to be trading. You're going to see that. You're going to make a lot of income. You're only going to spend about 60% of the income, so I can keep reinvesting. Those are the rules, and there we go. If you got to find somebody, and one of the things I used to tell them is, you're going to pay me, about 1.5% to do this.
Mm,
That's a lot.
mm-hmm,
But I am going to tell you that almost every year I'm going to make for you at least 1.5% just in profits, in addition to the all the income. So
mm,
that cost is going to be wiped out by the profits. I mean, in 2021, when we had that huge market rally, we made the same amount of money in capital gains and profits as we did in regular income, and we were making over 7% in income for people.
and what's this difference of income and profits? I thought they are
Oh,
one and the
oh,
same.
okay. Well, all right. If you own a security, if you
Mm-hmm.
own a stock, if you own some bonds, you own a stock, they will. If you're owning stocks that pay dividends every quarter, they're going to pay you some money. Part of
Yeah,
their
yeah.
after profits, they pay out dividends. So
Mm-hmm.
that dividend comes in. You're going to get that pretty much. The good companies very rarely lower their dividends, and they typically between every 4 to 6 months, many of them actually raise their dividends.
Mm-hmm.
So that's one source of income, and I call that an income stream. That income stream is a steady stream that I call base income.
Mm-hmm.
When you've got a good portfolio, you can make that stream as high as 4 or 5% if you select the right companies that pay that money, right?
Mm-hmm. Mm-hmm.
Okay, but profit taking is a whole nother stream of income. It's the market goes up, you might make 5% in one day.
Mm,
You may make 5% in 1 month or in 6 months, but five
mm-hmm.
percent in 6 months is twice as good as 5% over the course of a year.
Okay.
So if you're looking and keeping an eye on your portfolios, and this is why I have so many in my thing. I mean, I took profits on 7 different closed-end funds today in my
Mm-hmm.
own personal portfolios, and it
Okay.
was about 12 yesterday, 7 today. I like to do at least one in every account every day. It doesn't
Wow.
matter how big it is, just
Mm-hmm.
to, because it gives you that capital to reinvest again, which is
Mm-hmm.
another story. Let's not get into that. But it's a separate stream of income. So you can have these, let's say you have 10 securities. Some of them are up a little bit, some of them are down a little bit. One goes up 3%, you've only owned it for 4 months, okay?
Mm-hmm.
So 5% a year is less than 0.375% a month. Okay.
Okay.
10% a year, 12% a year would be 1% a month.
Mm,
So if you can make 1% on something you've only owned a few weeks or a few months or a few days, you're way ahead of where you would be if you were holding it for a whole month.
mm,
If you made 6%, it's the equivalent of a whole half year's income in advance.
okay.
So that's what profit taking does. It gives you that extra influx of income, and it lets you reuse a whole chunk of capital. So let's
Mm,
say in your other securities that you haven't taken a profit on, one of them is down 5%.
okay.
Okay. You can take some of the money you just raised and add to that. When you add to it, you're decreasing your cost per share and increasing your overall yield.
Mm,
So instead of it earning 5%, now it's earning 5.1%.
mm.
You see? So
Yeah.
so there's two streams of income you have to focus on when you're in, like in the book I call it income focused retirement investing. You're
Mhm.
focusing on income and you have two streams that you can, one stream that you can use. And with closed end funds, right now with interest rates just having risen a little bit and
Mhm.
prices are lower, that happens. Prices go down when interest rates go up, when you have interest rate sensitive securities. Right now, you could be averaging 10% on 200 different companies, 200 different closed end funds,
Mhm.
and most people could live on that. They could have their 4% of
Mhm.
their assets. They could have 4% income they're spending every month and still be growing with the reinvestment of income right
Mhm.
right now.
Okay.
So then they could be happy. But if you're like me and you're manic about taking profits and you want to get as much as possible, I don't know why, it's just in my genes.
Yeah.
And I say, no, this guy wants to give me, you know, $200 or $300 more for this piece of paper than it was worth 3 days ago. Sure,
Mhm.
I'll do that. I'm running a store. I'm running a department store. Everything is for sale.
Mhm.
Give me my markup and my out of here. When prices go up, I move my markup higher. So I'm
Okay.
not going to sell everything. When prices are down, I move my markup lower
Okay.
so that I continually take advantage of lower prices. I buy more of things that have gone down in price.
Yeah.
So
And in your client base, I want to imagine that you've worked with international clients. How
sure.
has that been? What's the difference in the markets that you have to deal
Well,
with?
I've 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 worked with a lot of international clients, and I've coached a lot of international clients lately. But I don't use international securities per se.
Mm-hmm.
I use global. I use closed-end funds that own companies in countries all over the world. You can get closed-end funds. A popular one is just invested in Cuba. That's a little too thin for me. You
Okay.
know, I do Asian or Australian or European stuff like that, or just plain global, where the manager is investing in countries all over the world. That's what I like
Mm-hmm.
because every economy can have different cycles itself.
Sure.
And if you are invested theoretically, if not actually, in every country in the world, you're going to benefit from the ups and you're going to be able to take advantage of the downs.
Mm-hmm.
Now, a lot of people say, well, if it goes down, it may there may be a good reason that it went down. Well, that's what you're when you vet your securities, when you determine what is a quality closed end fund, just like what is a quality stock. What are you establish requirements? For me, all my funds must be in business for at least 5 years.
Okay.
All have to pay 5 or 6% at least, and have been doing that for at least 5 years.
Mm-hmm.
They all have to have at least 50 different securities or companies inside. The average is over 200. So
Mm-hmm.
that's not a big deal to find them. There are a lot. There are some that only own 5 or 10 different stocks. That's the same. That's the same as having a portfolio of common stocks. It's too
Yeah.
risky for me. you know so I do at least that many different tests of the quality. If I've never heard of the company that's offering the closed end fund, I'll make those requirements stiffer. It'll have to be in business 10 years. It'll
Mm-hmm.
have to have more than 100 companies inside and so forth. But
Mm-hmm.
most of the big companies and most of the companies that use these closed end funds, like I said, they're the oldest form of fund in the marketplace.
Yeah.
These are companies like BlackRock, Nuveen, Gabelli, Eaton Vance. You know, all big name companies have these things.
Mm-hmm.
Um, the main reason they are not popular, and some people are not going to be a fan of mine for me saying this, but the only reason I can think of why people wouldn't focus on generating this kind of income for their clients is the simple fact that these things rarely go up significantly in price.
Mm.
And all of the financial managers in the world, including myself when I was one of them, we got paid on the amount of market value that we were managing, not the amount of income we
Ah,
provided for our
okay.
clients.
Okay.
So
I get it. I get it. Wow. Wow. Thank you, Steve, for everything that you've shared with us. And I want to believe that someone has got something from this episode.
I hope so.
Yes. And if you would want to know more, please go get the book, Retirement Money Secrets. I saw it on Amazon. It has some good uh, rating and quite a lot of, yeah, quite a number of reviews.
Yeah.
So I believe it's a good book. So go get it and learn more. So, Steve, if people would want to follow up with you, not just to read the book, but also to get to follow up with you, how can they do that?
I have a website called theincomecoach.net
Mm-hmm.
that they can contact me through that, and they can
Yeah.
read more about things that I do, what services I provide. But if they just want to have a group of similarly minded people to talk to, uh, I have a Facebook group called um, the Re- the Retirement Income Independence Coach Group. It's kind of long, but you get the idea.
They will get that.
Retirement Income Independence Coach.
Okay.
And it's a Facebook group, and it's a lot of good conversation with a lot of people who have made the transition from normal investing, normal type securities, to this closed-end fund mode of operation. And just go there, feel, you know, if you've already read the book and you have questions, raise your questions. You
Okay.
know,
Okay.
if you haven't gotten the book yet, these people will encourage you to do so.
Okay. Yeah, thank you. People are going to head there to get to understand more and also get their questions answered.
Yes.
So, once again, we thank you for coming to Now Tell Us. Thank you very much, Steve.
My pleasure. My pleasure. It was good conversation. Went quickly,
Yes,
didn't it? Didn't it?
time
It's been
goes
it's
quickly when
been
you're having a,
almost 40 minutes. Unbelievable.
yeah,
Yeah.
time goes quickly when you're having a good conversation, and this one was a good one.
Yeah, I agree.
Now, leave us with a few words that we should always remember. This is something that we ask at Now Tell Us, to leave us with some wisdom.
What should I say? I guess the things that I've talked about. Have confidence in yourself um, that you can produce income. You can get your income from your investments to a point where it can replace your working income by the time you retire. I think that's a goal and objective you can set for yourself. And the earlier you start, the more likely it is that you'll achieve it. And I think that's what your objection should be. And there are a lot of ways to minimize your risk getting there. And I think the book I mentioned will give you all of those tools so that you won't get caught up in speculations and chasing the price of gold or Bitcoin and stuff like that. You'll stick with quality and learn how to you know learn how to understand the stock market and the bond market much better than you do now.
Hmm. Wow, thank you for that. And be careful of the AI, says Steve. Oh, so yes, this has been a wonderful conversation. And to all you listeners or viewers, we thank you also being with us here at Now Tell Us. Uh, this has been Now Tell Us. I have been your host, Anthony Morori. And together with our special, wonderful guest, Steve Selengut, we're saying invest wisely. And
Yes, I'm into that.
bye for now.
Bye.
Bye.